Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, S&P 500, including the economic calendar. And I do upload these videos daily, so I highly encourage you to double check the latest videos. That way you have the most up-to-date information. I'm going to go over the economic calendar first before I get to the technical analysis portion. And for August 6, 2024, for the Tuesday, we have U.S. Trade deficit coming out at 8:30 a.m. Previously, it was 75.1 billion and expecting about 72.5 billion in terms of deficit. Now, in terms of trading day, it was pretty intense. We had the Japanese market go down roughly somewhere above 10%, give or take. And in terms of basically for Tuesday, in terms of futures and the Japanese market, so the Japanese market rebounded basically currently at the time of the recording of this video above 8% bounce, which is pretty impressive. And then futures for the US side, they're above basically 1%, getting close to 2% for the S&P and Nasdaq, and for the Dow Jones up 1% for futures. And at the same time, basically what caused for the Japanese side in terms of the overall market and all stuff, it seems like in terms of the Japanese side, because they're able to borrow money for so cheap, they're investing. So basically a bunch of margin plays happening on the Japanese side, quite a bit actually. And they're investing elsewhere. So because they're able to borrow for so cheap and invest elsewhere, they could get good returns and so on and so forth. But the problem is in terms of the in terms of the Japanese side, the interest rates are increasing, which is kind of causing an issue where people are basically getting margin called and so on and so forth and all that stuff. Plus we have tensions in terms of Iran and war and all that stuff too, potentially. So quite a bit of stuff happening at the same time. The question is, are we going to essentially go up or not, and so on and so forth? Because the Japanese market kind of, like you can see, bounced up about 8% currently at the time for the time being. In my opinion, I think more downside is coming because there's a few indications. So if you look at MACD lines, they indicate if it's a bearish or bullish movement. So for example, here's an example. It's an MACD line and it's in the bearish movement, so indicating that the movement for the time being is bearish and it doesn't really show slowdown. This is just one snippet of time, right? So we have that. And at the same time, for example, another indication, not necessarily indication because it's not necessarily guaranteed, but Warren Buffett has sold quite a bit of Apple stock, I believe 50% of his position. I believe from what I saw before too as well, for Bank of America, for 9 trading days in a row, he was unloading Bank of America shares. He has quite a bit of cash positions on hold as well. And again, to state back to the MACD lines, for the short term a little bit, and you can see right about here, this is the Dow Jones. It's actually at a perfect spot where it looks like it's going to be bouncing. This is an upward trend support line dating back since the beginning, almost somewhat at the beginning of the year, April of 2024, and it's bounced on this level. So you could assume that potentially it'll bounce off, but the problem is the longer MACD lines in terms of, which I'm going to show later on, they're showing further downside. So we might get a bounce up a little bit, especially since the Japanese market bounced up as well. But I think it's going to be short-lived, in my opinion. And again, this is always just my opinion, so please do your own due diligence and research before buying and selling. But I think it's going to be a short bounce. If anything, it might not even be a full day bounce by the end of the trading day or maybe early next trading day morning. So, for example, not the end of Tuesday, but maybe the Wednesday morning, we'll see further downside coming back down, right? Even though we'll see a bounce, we'll probably see a back down drop and all that stuff. Another thing I noticed for today that kind of, it almost seems like potentially this could be artificially being propped up a little bit for the time being, and then the more downside is coming based off the MACD lines, like I stated, was the fact that a lot of brokerages were like essentially not operating for today in terms of investors to buy and sell kind of stuff. And at the same time, like Robinhood, not putting any blame on Robinhood at all right now, but in terms of 24-hour buying for tonight, they've stopped it too. So it's a lot of coincidental stuff happening at the same time. Not necessarily saying anything, but I'm just saying like this could be artificially being pumped up for the time being. Again, like I stated for Japan, the bounce up 8% right now doesn't make sense for given the issue that if they increase interest rates, additionally continuously increase interest rates, the problem has not disappeared because the amount of play that's being happened in terms of margins, I think when I looked at it, it was roughly about $21 trillion or something. It's quite a bit. It's quite a bit of money in play right now in terms of margin investments happening in Japan. So it's not going to stop anytime soon. So with that further downside plus the MACD lines indicating further downside. Again, these indications doesn't necessarily mean that it's actually going to be guaranteed further downside, but it's just the movement tends to be moving that way right now for the time being, and indications are pointing further downside. But yeah, so now let's go down to the breakdown of the actual analysis. And one thing I want to show is for the S&P and Nasdaq, because both of them have the same thing. This is an upward trend resistance line dating back since 2010, upward trend support level dating back since 2010 as well. And then for big, massive dips, it's dating back since 2010. Now, the only thing is, though, there's only 2 touch points for this, so I wouldn't really rely on this yet. But maybe the third touch point, when a major crash happens, we will get there, and that will be stop where you could expect to bounce back and buy massive dips right about here. But either way, I digress. So what I want to show is, we're currently right here at about now basically $517. Mind you, closed at $517.38, and all as well as the futures are up, by the way, so keep that in mind. But we have a long way to go to the downside. I'm not necessarily saying we're going to come down to this level, give or take, but essentially $450 for the most part. Plus, this is where the moving average, one of them is $450 and $434, give or take. Obviously, these all move. The lower the high will be, the longer we take. And I'm not saying necessarily we're going to get to this level. I'm just saying we do have room to the downside. That's what I'm trying to indicate. This is for the longer term. Now, in terms of shorter term, let me zoom in. And this is the play we've seen so far. Let me go to the 6-month actually, so that way I could visually see. And I've indicated that we were going to get to the 517, give or take. We've seen dips right about here, and a couple of dips right there. So 517 was anticipation, give or take, around that level. But we broke through it quite a bit. It was massive drops. It was insane because obviously Japanese market, war, and so on and so forth. We actually got down to like $507, give or take. And the question is, where are we headed now for the most part? Now, if we do end up going to the upside, give or take, we could go to the $525 and see resistance. And the 525 I'm basing it off of is this gap down right about here, 525. Plus there's a horizontal support level going across, plus horizontal resistance and horizontal resistance around the 525. So there's support and resistance plus the gap down. 525 could go up to it and then potentially get knocked down, like I stated, by the end of the Tuesday, potentially, or by the morning of Tuesday. But if it ends up going pretty crazy to the upside, I'm not expecting it to pass about $531 and some change. Obviously, the 530 is going to be some resistance, but the 531 is found out from the resistance level. Obviously, a couple false breakouts, but then the support level as well, plus the previous zone where we basically almost gapped down, or not gapped down, but from the starting point before we gapped down, right? So 531 some change, and just to visually show what I'm expecting, potentially, if it does actually go up to the upside, goes up, the market gets excited, expecting a recovery, but realistically, the MACD lines are showing further downside, and then next trading day start and heading down. So this could be a 2 trading day, if not 1 trading day, and then goes up mid or something like that, whatever. But the next trading day starts heading down and then coming back to a stabilized point, which I was expecting before to be hopefully support, but it's not going to be support. It's going to break through about 518, 517 and some change, give or take, and then start trickling down to this zone, in my opinion. So expecting to head down to essentially 499 first. The 499 is going to be hopefully support. Hopefully it could break down to the 493, because I remember when we were in this zone, 493 was quite a bit of support constantly. But first is going to be 499 and some change, and the reason why I'm showing that or expecting that 499 and some change is this moving average for the 1 year is about 499 and some change. And an additional thing to expect for the downside is we broke through 2 moving averages and we're heading to the last one. Again, 499 and some change, 500 essentially. I think we're headed down to that price point, but we'll see. And then now going for the Nasdaq, which is, I'm going to be looking at QQQ, which is an ETF for the Nasdaq. This one showing pretty much big drops for the most part. Again, for the time being, in terms of upside, for the short term, essentially, it's expected to go, in my opinion, the max it'll go to is essentially around $448 and some change. Essentially $449 and some change, because I remember when I zoomed it was closer to 449, and 449 is based off of resistance right about here. I believe there was an additional touch point somewhere else, but either way, before we gapped down, there was roughly about 449, 448. So in my opinion, the most they'll go up to for 449, 448. Obviously it could go higher, right? I could be wrong, obviously, but then when it starts trickling down, by either end of Tuesday trading day or Wednesday trading day, we'll start seeing the level back down to $433, give or take, 433, 434, because we've seen support quite a bit in the 433, 434 range right about here, plus resistance and so on and so forth. Plus we kind of close to it anyway. So that could be support potentially, or heading down and closing towards the end of trading day, but ultimately start heading down to this level. So the level I'm looking at is $413 and some change, give or take. It could be within the zone of the 420, 421 to 413 and some change. And I'm basing that off of the support level right about here horizontally. It's going to be a rough line drawn, but either way, give or take right about here. So we see support right about here and support, and then somewhat consolidation, so like a nudge right about there. But essentially, for the most part, getting down to $413 and some change. Again, for the Nasdaq, I didn't show this yet because I showed it only for the S&P. Upward trend resistance line dating back since 2010. Upward trend support level dating back since 2010. Yeah, it broke out since 2020 to 2022, but there's a lot more room to go to the downside. Now, you could argue that maybe we could bounce up to the upside because we're on a moving average and it's perfect time to bounce off it. The only problem is the MAC lines are indicating further downside. Like I stated, the markets for Japan is potentially in a bad situation unless they delay it and then somehow solve it later on, so on and so forth. But if you think it's going to drop down, it's not going to drop down like a rock to this level. But currently where we're standing at is dropping down to 300 and give or take 320 points, or $320, give or take. Mind you, close at $435.37. Obviously, that's not going to happen. It's not going to drop down significantly that quick. I wouldn't say obviously, because we saw the Japanese market drop close to 12% at one point, I think. But either way, we have moving averages 365 and then 348. These are just rough numbers. And then we have obviously the 319, 320, give or take, upward trend support level that we've seen in place since 2010, right? Actually, this point right about here is in 2009. But yeah, I don't expect that to happen necessarily that quick, just FYI. And now for Dow Jones is pretty interesting because it's actually at a perfect level. This upward trend support level dates back since April of 2024. The unfortunate part is, like I stated, the MACD lines, even with the Dow Jones, so all of them, S&P, Nasdaq, and Dow Jones, show further downside. I think we're just going to see a bounce up to the upside. And this upward trend resistance line dates back since 2021, just in case you're a new viewer. Upward trend resistance line dating back since 2021. I don't personally think we're going to see it potentially anytime soon, unless the markets somehow recover, because the problem is the Japanese market plus war. That's the problem, right? But I don't know. Who knows? Anything's possible, right? And the moving averages, I think, will stop us too. So we have the upward trend resistance line, moving averages, so on and so forth. But anything's possible. Either way, the currently closed at 38,703 points and 28.28. But if we end up heading up to the upside, the first level of resistance, give or take, is pretty much, when I checked it, it was about 39,400, 39,500 points. That was based off horizontal resistance, but I've seen spike ups horizontally. I apologize for not showing a good visualization right now for the time being, but essentially going up to maybe about 39,700. That's by the previous gap up to the upside, and then hitting the utmost highest, in my opinion, the moving average, about 39,000 and like 900 points, give or take. And that coincides perfectly with the previous horizontal resistance levels, with a little bit of so you see 1, 2 touch points, 3 touch points, 4 touch points, and a support touch point. So those are resistance and this is support. And then this is support as well. So that's about 39,840 points, give or take, plus the moving average colliding at the same time. So it's about somewhere about 39,850 points to 39,900 points, give or take. And like I stated with the S&P and Nasdaq, maybe the market gets optimistic, starts going up, maybe has some issues passing about the 39,400, 39,500 like I mentioned earlier, and then maybe end up actually getting too optimistic and going to the 39,850 to 900 points, give or take, and then ultimately start heading down by the end of trading trading day of Tuesday, or by Wednesday morning. We'll start seeing it heading down. Maybe by the end of Wednesday trading day, we'll start seeing this level again, which is roughly about 38,550 points, give or take. If you think this upward trend support level dating back since 2021 will be in play, I just don't think it'll be in play that quickly, personally. But there was a lot of support levels back in 2021, and that will be roughly about dropping to, let me zoom in closer, you're looking at potentially support at roughly about 37,845 points, give or take. Obviously, the longer it takes, the higher the low will be, but we'll see. We have to assess it day by day for in essence. But there is a possibility the markets end up opening. Actually, I should have stated that for S&P and Nasdaq. If the markets end up opening somehow negative, before, like in terms of pre-market, and the market's open and just ends up tanking, we will potentially, to be honest, start seeing like this, for example, the 37,816 points, give or take. Obviously, these are rough numbers, and we'll see probably quick drops. So it might even be 37,800 clean. So yeah, so just be aware of that. But that's basically it for today's video. If you found it beneficial, consider dropping a like. It does help our channel, so thank you so much for that. I do appreciate it. And I do upload these videos daily, so highly encourage you to recommend you to, in terms of following and subscribing, so be notified when I do upload the next video. Thanks again for watching. I do appreciate it. And God bless. Take care, and peace for now.